please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning and welcome to Power Breakfast on CNBC TV18. I'm Ekta Batra. With me is Nigel D'Souza, and it's a fresh start to a fresh week. So let's see how it goes. Hi, Nigel.
Hi, Ekta. Good morning. Well, it's going to be all-important week. Towards the end of the week, we have earnings that kickstart. So that's going to be really the focal point. First up, though, let's run you through.
Well, let's get talking about what today's trade is probably going to look like. Currently, the SGX is indicating that it could be a little bit of a negative start for us, but we have a lot of cues to reckon with through the week as well. Maybe there will be that run-up towards earnings season. Plus, we have some bond positive news this morning as well. A lot of news to reckon with, Nigel.
That's right, Ekta. And good to see that the Asian markets are more or less stable, because we had a couple of headwinds that we have got over the weekend. One being the trade war that's brewing between the United States and China. And the second factor really is the disappointing US employment data. Does that affect the Indian markets? No, it doesn't really directly affect us. And if we just take a look at what we did in the last week, well, the Nifty had a rally of around 2%. We had the Nifty Bank that was up close to around 2.5%. And as Ekta said, yes, those bond yields, they have been softening. And that's been pretty good news, really, for some of those NBFC stocks. If you take a look at it last week, well, we had positive data coming in for Tata Motors. So Tata Motors bounced off more than 10% from the 52-week low. We also had Lupin. That stock as well was at a 52-week low. So you had 10% returns on some of those large cap stocks that have otherwise underperformed this market. Bajaj Finance, that really replicated the softening of those bond yields. Even India Bulls Housing Finance as well did quite well. And Kotak Mahindra Bank really were the best in class. That as well gave you returns of around 6%. But you look at the broader markets, there were even better returns to be made over there. So yes, we had the Nifty that was up 2.5%. You had the Nifty Bank that did well. Even the mid-cap and small-cap space did well. But if you got the stock right, well, it made you big returns, like Jubilant Foodworks. That was up more than 20%. The softening of the bond yield story, that played out in Shriram Transport as well as Mahindra and Mahindra. And also you pull up a couple of other stocks, something like a Hexaware and Exide, they as well did well. So yes, we have some global headwinds, but individual stocks, they're still giving you big return. Now, as Ekta said, yes, in fact, the RBI said that the FPIs, they are allowed to invest a tad bit more in G6. So it'll be at around 5.5% for the coming year, and in the next year, it'll be nearly around 6%. Some part of that, yes, it was more or less on expected lines, but what that could do is it could soften the bond yield further. So you pull up the bond yield, it softened nearly around 70 basis points from the recent peak. And if that happens, then in fact, we could see a bit of a rally on some of these NBFCs, even from these levels. Well, in Friday's trading session, the Nifty did well. We recovered a goodish bit from the low point of the day. And by the end of the day, well, just pull up the intraday chart for Friday's trading session. You'll see that the Nifty did pretty well. That's not really the chart that we're looking at. The DIIs, they pumped in more than 1,300 crores. Close to around 800 crores is the net buy number. And in the last week itself, the DIIs, they pumped in more than what the FIIs sold. So we should get that number as well up for you. More than 2,600 crores were pumped in by the DIIs. The FIIs, they sold close to around 1,300 crores. So clearly, last week's rally was a DI-led rally. But in terms of what's happening on the index futures, the longs are only at around 20%. So if in fact those shorts decide to close out at some point of time, we could be bracing ourselves for a bit of a short covering bounce. All eyes, though, at the end of this week on the Q4 earnings. Infosys kickstart that. And in fact, SkyMet has said that there's almost a 0% chance of seeing a drought in terms of the monsoon forecast. So that as well should be good news. Well, key levels that we're looking at on the upside, in fact, we're looking at the 100 DMA. That comes in at around 10,436. And the 200 DMA, that's where we should see some support at around the 10,200 odd mark. So we expect to be in a bit of a range here. The one final point, the mutual fund inflows into equity funds, they slowed down a tad bit in the month of March. But interesting to see what numbers come out in April as well as May, because CLSA, they have cited various headwinds. Like, in fact, maybe they'll be looking forward to carry forward long-term losses. Because now if you book a loss, then it can be set off against your profits. So we'll have to keep that in mind as well.
Yes, very interesting to see that and the kind of redemptions we saw this time round for the month gone by. But Nigel, what about stocks?
Well, Titan should be one stock that we should look at. It's come into the Nifty, so we'll keep an eye on that one. Well, they've said that the Q4 numbers should look good because it's been a good quarter for the jewelry division. Remember, their market, the market share as well would increase because some of these players have got shut down. So that should be a stock that could open up in the green. Deutsche Bank, well, they are saying that in fact they've increased the target price on Kotak Mahindra Bank. The stock was up 6% last week. They're giving it a price to book multiple of close to around 4 times. And the target price increased to 1,280. We had KPIT Technologies that could be in focus. They've got the CCI, CCI has given the go-ahead for that arrangement in terms of Birlasoft as well as KPIT Engineering. So keep an eye on that stock. India Bulls Real Estate, they have acquired prime land, and they're indicating that it could give annuity revenues of around 1,500 crores. So we'll keep an eye on that stock. CRISIL, that one in fact last week had a bit of a run. Now the management says there's going to be a board meet in the next week itself for preferential allotment of some shares to promoters. So we'll keep an eye on that stock as well. And Godfrey Phillips, well, the DIPP, they have called for a meeting for all stakeholders with regard to FDI in tobacco. Remember earlier they had proposed, DIPP had proposed a complete ban on FDI in tobacco segment. So Godfrey Phillips could be that stock. It normally reacts to this set of news. We have a new kid on the block, Lemon Tree Hotels. That lists today. So keep an eye on that one. And finally, in terms of the F&O market, there's another stock that comes in the F&O ban, Jet Airways. So we should focus on that one as well. CNBC TV18's India Business Leader Awards were held over the weekend. And from the sidelines, Ritu Singh caught up with Shankar Sharma and began by asking him as to how investors should really deal with this volatile market and how will India's growth story pan out going ahead. Let's listen in.
I think the market had nothing to do for the last couple of months, so it started to focus on issues which were way out of the pay grade of the Indian stock market. So trade war between China and America, I mean, where is India in this whole thing? But, because there was no result season, people were just kind of, short on things to do. Everybody started focusing on that. But I think come April, I think everything's going to change and go back to the locals, go back into what we should be focusing on, which is domestic, fundamentals, micro or macro. And I think at least the micro looks very, very good. I think numbers are, in general, for at least for small caps companies we follow, going to be very strong. For large caps, it might be a tad better, not a whole lot better, but at least a tad better.
But while you're saying the micro looks good, are we really out of the woods? We're also in an election year. It'll be an interesting year in terms of what happens to the fisc, what happens to the expenditure. Is it really the best of times for India right now? Are we really out of the woods just yet?
No. I'm not saying we're out of the woods on the macro, which is why I qualified. I said the micro looks very good. The macro is a little troublesome. I do not necessarily agree with the RBI's sanguine stance on all that it said yesterday. I think inflation is a genuine problem. I think crude is headed a lot higher than where it is right now. I think they're underestimating the effect of crude. And I think the fiscal slippages will be a lot more than what people are budgeting for.
I also wanted to ask you about insolvency cases. That's a big theme playing out in the banking sector. Now, some of the large cases are getting resolved, but do you think for the equity shareholders, is this a good thing that what we're seeing playing out? There are good bits that are coming in. Some of the haircuts are very low for the large operating steel plants. Should equity investors in these companies be excited?
No, look, in any bankruptcy or a near bankruptcy situation, there's nothing in it for equity shareholders. I mean, that's the law of the jungle. So you're not going to get anything. I mean, you're lucky if you get 5 cents to the dollar, if at all anything. Because if I'm the buyer of a stressed asset, I'm going to say I'm going to pay the equity holders who have no claim, who are last in the chain, in the food chain, I'm going to give you nothing. And what choice, does the court have or the lenders have? They'll agree to my demand. So they will get 4%, 5%, 1%, 2%.
Okay, all right. Well, that's some opinion coming in. But government and banking sources tell CNBC TV18 that the Reserve Bank of India may tweak NPA resolution rules soon. And a parliamentary committee meeting is scheduled on this issue. Ritu Singh joins in with details on this.
Well, that's right. The government and banking sources that we've spoken to did say that they've sent their proposed changes, their recommendations on the Feb 12th NPA circular to the RBI, and changes are expected soon. As you said, there is a parliamentary committee meeting on the NPA circular tomorrow, and banks are also going to be present there to make their cases. they've already made representations to the RBI in a letter sent via the IBA and sought several changes, but the key of them, the most important one is the removal of the one-day default rule to extend it by another 30 days. They're also seeking approval for resolution plan to be brought down from requiring 100% voting by lenders to only 75% agreement. They've asked for several restructuring cases like XDR, SOE that are under implementation to remain in standstill mode until the end of that standstill period, or at least till August 31st, whichever is earlier. They've asked for refinancing of standard loans to infrastructure and other core industries to be not treated as a restructuring, but allowed to be kept as standard. Several other norms, several other proposals that the banks have also made include that the framework should be extended to also apply to NBFCs and asset reconstruction companies. The timeline for filing of the insolvency process should be increased to 45 days versus 15 days in the circular. So several such rules, but the most important bit is that the government is very confident that this week itself we should hear something very soon from the RBI.
All right, Ritu, thanks so much for joining in early this morning and giving us that quick update. In fact, we spoke to Rajiv Kumar, the DFS Secretary, on the tweaks to the NPA and the overall banking system. Let's listen in to what he had to tell us.
IBA has represented to the RBI. There are representations which have come from other sources as well. The regulator is seized with the matter. There are 2-3 specific issues out there. One is about the one-day default. Another is about the veto. So I'm sure the decision will be taken and the references have been sent to the regulator for this.
You quite literally are the man in the hot seat given everything that's happening in the banking space, whether it's public sector banks or private sector banks. Are you worried, sir, that there is so much focus and so much attention on everything that's happening in the banking sector that is going to constrain banks, whether it's public sector or private sector, from lending forward?
Firstly, I'm not worried. I look at this as a clear opportunity in the crisis. I look at the coming year as a year where the entire cleaning takes place, the growth takes place, and synergies are established. When I talk of synergies, synergies are of operations, synergies and the space of strategy which banks adopt for themselves, and I see it a great year for growth.
It seems like there is a move from public sector to the problem shifting to the private sector as well. How concerned are you about that, sir, in specific? I mean, you've got a government nominee on the board of ICICI Bank as well. What do you make of that situation?
See, the entire financial space, the public sector, private sector, both have very important role to play. And more than that, you have NBFCs, you have microfinance, you have financial inclusion. So a whole lot of financial space. I see a very distinct role for both to exist them in a right environment so that you have proper competition. And it's a good time for both. It's a lending time for both.